Now, the Central Bank of Kenya says its Monetary Policy Committee will meet on September 20 to set its benchmark lending rate. At its last meeting in July, the bank held its lending rate at 10.5%, saying recent increases in fuel taxes would temporarily put upward pressure on inflation. Meanwhile, Kenyan lenders have been asked by the central bank to cut loan rates by 100 basis points immediately. That's part of measures to lower borrowing costs and see off the threat of a legislative cap on rates. Now let's cross over to Kenya now and see how this is playing out in the banking industry there. I'm being joined by the head of banking research at EcoBank Capital, George Bodo. Good afternoon, George.
Good afternoon.
Now, Kenya Parliament has decided to cap the bank's lending rates at 400 basis points above central bank's policy rate, which is now at 10.5%, although this is still waiting for presidential assent. How are the banks in Kenya taking this?
It's been taken not nicely. I think there's an element of panic across the market. And you know that if this actually becomes low, it will actually soften the net interest margin for the banks, because Kenyan banks have for a long time enjoyed wide spread between the lending and deposit rates. Essentially, what this is going to do is that it's going to put a floor on the deposit rate at about 70% of the benchmark rate, and currently that translates to about 7.32%. And then it will cut a lending rate of 400 basis points above CBR, which is about 14.5%. That will mean that the spread will be about anything between 600 to 700 basis points, and this is banks are not taking it so nicely.
All right, now the Central Bank of Kenya has never been in support. Of a cap in rate. Now, it has always wanted the market to determine the rate, but obviously what the legislature is trying to do is for the interest of the borrowing public. And for the central bank, if that happens, it's likely going to discourage banks from lending. Now, is this actually the case?
Yes, it is the case. So we know that the fate, the whole goal behind this deal is to make credit affordable to the ordinary borrowers. But the point is that if you cap lending rates, then you're capping risk pricing. This is not good for credit extension, to the extent that two things don't happen. Number one is Treasury has to make sure that the risk-free rates are always below the lending rate cap. And sometimes it's difficult to maintain that, because if they don't do that, then banks will surpass lending to the real economy and will instead buy risk-free assets. So I'm talking especially if the risk-free rates are above 14.5, then banks would rather buy risk-free rates than lend to the general economy. The second issue here is that monetary policy transmission. The whole essence that central bank monetary policy actions are meant to regulate the cost of money. Now, once you're capping the cost of money, then the efficacy of monetary policy transmission, especially through instruments, the Kenyan bank has different ways in the central bank investment. It will not be fair to the market. The central bank needs to achieve its overall goal of price stability. So these are the two biggest concerns right now, especially on the central bank side.
Now, the central bank has asked the lenders out there to, actually cut back their own loan rate. So if this eventually happens, what I mean by that is, if the president eventually signs this bill of rate capping, into law, are the banks actually complying with this directive by the central bank?
So essentially what happened is that yesterday, the banks, commercial banks, through the Kenya Bankers Association, they presented a memorandum to the central bank. A memorandum of understanding, an MOU, to the central bank. So essentially this MOU contains 7 items, and banks basically were committing to lowering lending rates through this MOU. So among the 7 items that were presented to the central bank, one of them was effective policy translation, which is complying with the policy signals. So a month ago, Central Bank came up and cut the Kenya bankers' reference rate by about 100 basis points. So banks say they'll commit to acting on these policy signals. So essentially what we've seen over the last 2 days, banks have actually been publishing on the newspapers the intention to drop down their rates by 100 basis points. That's number one. Number two, one of the key, I'm talking about the key items in the MOU. Number two is that they were committed to complying to risk-based lending. There's been an accusation in the fact that banks are not using credit risk bureau reports to price lenders. So they've committed to going forward, actually using the bureau report, the reference bureau report to price people. And also the third key pillar of this MOU is that they've committed to avail a 30 billion SME facility. In dollar terms, it's about $300 million facility to SMEs and micro businesses and youth and women-owned businesses. And essentially what they're saying is that this is going to be a subsidized facility. The lending rate cap is going to be at 14.5%. So these are the things that banks have. It's all sign of, for me, it's a sign of panic. We're trying to dangle a carrot to the president not to sign that bill.
All right. Thank you very much, George Bodo. We'll keep an eye on that and keep track on whatever that happens afterwards. That was George Bodo, the head of banking research at Ecobank Capital. Now, Nigeria has started a commuter train service linking its administrative capital, Abuja, to major hub, Kaduna, in a move expected to open up areas along the route. Nigeria is working to expand its infrastructure, including transport and power, to help diversify its economy and alleviate poverty.
Commuters in Nigeria are enjoying travel with ease on the newly launched transit railway linking the country's capital, Abuja, to the northern city of Kaduna. Many commuters say it saves on travel time and offers an alternative to what would otherwise be a 3-hour bumpy ride by road. The 186.5-kilometer standard gauge track built by the China Railway Construction Corporation was finally completed 7 years after the project kicked off, while former President Goodluck Jonathan was still in office. The Abuja-Kaduna route has 9 stations with travel time set at 1 hour 30 minutes for both passenger and cargo trains.